Hi, it's Catherine Smith here from Holistic Financial Solutions. Today we're going to talk about how to buy property in a self-managed superannuation fund, or SMSF for short. So, how to borrow to buy property. Before we talk about borrowing to buy property, just a quick note that you can also buy outright if you have enough funds to buy one outright. But there are some significant benefits to using borrowings. So you can borrow from the bank at a 70% loan to value ratio. So for example, a $500,000 property, the bank would lend you $350,000. So you'd only need $150,000 of your own funds. The good thing about the 70% loan to value ratio is that the property can be cash flow positive from day one. So you can buy a property, hold it in your superannuation fund, and actually have no funds out of your personal pocket. So no impact on your personal cash flow. You're also using the power of leverage. And this is where we can show clients how you can use a smaller amount of super and use the power of leverage, which is the power of the bank's money, to have a much larger amount in superannuation growing for you. I'll show you some examples in a moment. Just a quick note, you don't have to borrow from the bank. You can also lend to the self-managed super fund yourself, rather than as a contribution. So what is the loan arrangement? Firstly, you need an SMSF, which WFS can establish for you, or if you already have one, we can review it for you to make sure it can borrow to buy. We then help you obtain a loan pre-approval, which is very important. We strongly suggest that you get the pre-approval so you know exactly how much the bank will lend you before you go out there and start shopping. We then help you find a property, or you can find a property yourself. We then set you up a bare trust, which basically holds the property on behalf of the super fund. We advise your solicitor that the property will be bought in the name of a bare trust. Exchange the contract and proceed to settlement in very much the same way as if you were buying a property in your own name. So what is the opportunity, and why are so many thousands of people rushing into buying property in SMSF at the moment? Firstly, there's a maximum of 15% tax on any rental income. You also have asset protection from creditors. There's also a maximum rate of 10% on any capital gains, which is far less than you might pay in your own name. But there's more than that, the biggest incentive of all. If you keep those properties until age 60 and commence a pension from the fund, any capital gain on the property will be entirely tax-free. Any rent on the property will also be entirely tax-free. And any income paid out to you as a pension will also be tax-free. It may sound too good to be true, but we've been working with clients for a long time to set up this strategy. The government is very concerned about the future of the Australians and really want us to provide for our own retirement. And that is why they have made these rules. So to give you a simple example, you could buy one house at $500,000, which is a fairly standard investment property price at the moment. As you may be aware, house prices have historically doubled every 7 to 10 years. Even though there's a lot of economic instability around the world, most of the economists around Australia are still saying that there is no reason why this wouldn't happen in Australia again. So in 10 years' time, that house could be worth $1 million. You've made a $500,000 capital gain. Not only that, but you have an extra $500,000 growing for you in superannuation. So doing this in an SMSF, rather than in your own name, can save you up to $125,000 in capital gains tax. And I'm sure you'll all agree that it's far better to have that tax, that $125,000 in your own pocket, rather than paying it in tax. But let's take it a little bit further, because I am seeing a lot of clients that are able to buy two houses at $500,000 each and hold them for 20 years or even more. So just another example, in 20 years' time, these houses are now worth $4 million. You've also made a $3 million capital gain. That's fantastic. And doing it in an SMSF will save you approximately $750,000 in capital gains tax. I'm sure you'll all agree that is a massive saving for simply buying a property in SMSF rather than in your own name. But there is even more. If you hold those houses and rent, The rent will be an estimated $4 million per week, and that rent can be tax-free in an SMSF. You can also draw the money out as a pension, which will also be tax-free. So there are other benefits of an SMSF if that isn't enough. SMSFs are very, very simple to operate and to run. You have total control of your super. No longer is your super outsourced to a manager and you have very little or no say in it. You also pay far less fees. We were able to show a client this week how they could reduce their annual fees from $18,000 down to $2,500. Super also does not equal the share market and managed funds. Setting up an SMSF enables you to take it out of the share market and managed funds. You can invest it there if you so choose, but you can also decide when, where, what and how to invest in. For example, property, managed funds, term deposits, your choice. And WFS can also do all of this for you and do all of the paperwork and make the whole process very, very simple. So who is WFS and what can we do for you? WFS, Holistic Financial Solutions, has all your financial needs under one roof. We can do the administration of the SMSF and the accounting work, tax for SMSF, business and personal, financial planning, strategy, shares, managed funds. We also do insurance in the superannuation funds and outside. We can also help you with property purchasing and finance. And finally, estate planning. So if you'd like to know more, visit www.wfscanberra.com.au for more information, or email us at reception@wfscanberra, or simply call us on 6162 4546. We do offer a 30-minute free consultation to see if an SMSF or buying property in an SMSF would work for you. So call us now and make the most of this opportunity.